Hi, everyone. Welcome back to another episode of Reinventing Finance. Today, as usual, I'm not alone, but I have two awesome guests and one lovely co-host, starting with my co-host. Tom, how are you this fine morning?
Thank you, Nick. Very fun. Looking
Awesome.
forward.
Likewise. I have two guests who I've known for a while. Dan, we weren't quite sure, but I think it has been years. Some we did have some touch points more recently. But maybe before, without any further ado, Simon, do you maybe want to start and briefly introduce yourself, what you're up to, and then maybe Dan, and then I'll leave it up to you to get everyone excited about, and what the hell are you guys doing together?
Yeah. So for the last several years, I've been an independent advisor to companies on new business models, particularly in the financial services sector. So I set up a business called Embedded Finance and Super App Strategies, looking at embedded finance and embedded insurance opportunities for incumbents and startups and others. And it was through my work on embedded insurance that I met Dan, who will introduce himself in a second. And we had this, or Dan had already had the idea for ARK, which we'll describe in a second. And I thought, what a wonderful vision, and it ties in very well with the type of work I'd been doing before. So my big insight when I looked at the insurance industry was this enormous gap between what the world needs from insurance and what the industry, the current industry, is able to deliver. And I had been looking at ways of how you close that gap with embedded insurance propositions. But actually, the gap is so big, it's getting bigger, and there are sort of more significant interventions we need to make. And that is essentially what ARK is about, which we'll come on to later on this podcast.
Dan.
Great. Thank you for having us on. Nice to see you again, Nick. I am CEO at ARK, but the industry probably is more familiar with me for the role in founding and running 90, which is the only real insurance-specific innovation agency out there. And so I've worked for probably the last 15, 20 years at the intersection of innovation and insurance, working with a lot of the big incumbents in that space. But for the last year, the vast majority of my effort and my attention has been on this new initiative, ARK, which looking forward to telling you about today.
So are we. Go ahead. What's ARK?
Well, let me explain kind of the belief system that sits behind ARK, and Simon's teed us up a little bit on this. So we believe that insurance is what you might describe as an apex industry. So if you think of a kind of almost a food chain, at the very top of that are a very small number of industries that shape and dictate how society itself at large, and how business, how government behaves. Insurance is one of those. There are very few of those. And we believe that given that privileged position, insurance actually has a moral responsibility to engage not just with the small scale risks that we face, but with the biggest systemic risks that face people and planet. So things like aging populations, the threats to democracy itself, biodiversity loss, mass global migration, technology addiction, and many more. We believe that we can use that apex industry power that insurance has to shape behaviors at societal level and create new incentives and dismantle other incentives to directly tackle these systemic risk issues. But that's a hard thing to do, and we believe that we'll need to combine the original spirit of insurance that I'm sure many of your listeners will carry in them with the creativity of entrepreneurs, that kind of creative problem solving, the leverage that governments have in affecting society at large, the passion and the knowledge of NGOs, and the convening power of the big multilaterals. And if we can combine all of those things, we can make this happen. And ARK, which is the venture studio at 90, is where we are trying to work those beliefs into a practical, repeatable, and high-impact ecosystem and business model that's building companies, new startups, new ventures, that directly tackle those systemic risks to people and planet using the power of the insurance and risk industry. That's what we're up to.
So Simon, what did he omit, and or where did he where did he go off script?
He covered quite a lot there, didn't he? Protecting the world, protecting people and planet from impending doom. That's quite a good thing to get out to say. That's what I'm doing every morning when I get out of bed.
Wednesday, on a Wednesday morning.
What am I going to do today? I'm going to protect the planet. Yes. I mean, I suppose just being very, very specific, I'll repeat a couple of things that Dan said there, because he was covering a lot of things, is that ARK is he did say this, a venture studio. So its business is to create 50 ventures, new businesses, new startups over the next 10 years that tackle specific aspects of these great risks within those broad categories that Dan mentioned. So climate change, poverty traps, health and wellness, and what we call digital dystopia. And these are enormous topics. But by combining those assets and capabilities of multiple parties that Dan mentioned, and creating ventures run by entrepreneurs that can fast track the development of solutions for them around the world, then we think we can be a catalyst for the sort of change that is needed. And I think the more I've worked in insurance, and I know Tom and Nick, you've worked in insurance and finance for a long, long time as well. The power, as Dan said, of these industries to support society is quite considerable. But the business models of the incumbent players have been sort of constrained. They're trapped by various constraints to do with profitability, to do with skill sets, cultures, pressures from shareholders to deliver certain types of outcomes. And what we felt is, particularly from Dan's side, who's been trying to help traditional insurers innovate for many, many years, and my perspectives coming into this industry with a fresh pair of eyes, is that the industry has been trapped, not able to address these topics. And by combining those capabilities that I mentioned with entrepreneurial dynamism at the front, then we've got a chance of making a difference. And I should say one other thing that Dan very modestly left out is that we're attracting a lot of attention now. So ARK has been in stealth mode for the last, in 2022, only started about this time last year. It's already created 4 ventures, or they are in early stages, I should say. We'll talk about those later. And then we went public this year, and we've had people like the Gates Foundation putting money into ARK, the UNDP supporting us, very large insurance groups and other non-insurance organizations who see the benefit of what we're trying to do. So we went on a tour of Europe a couple of weeks ago to spread the news, and got a tremendous response from those who also share that same passion that there are significant problems in the world, and new forms of insurance and risk management, let's say that, can be a lubricator to address these problems.
So before we potentially go, because I think we definitely need to go into the concrete ventures, because I think that makes it more clear. But what I would be interested, if we could remain a little bit more on the meta level, would be, what's the sales pitch? I get the moral sales pitch, absolutely. But what I've also heard, what a lot of people then kind of goes like, I as an individual would, however, me as a representative of organization XYZ have certain constraints. I have, you've mentioned, I have shareholders. We might be a dividend stock. I have profitability targets. I have quarterly. I have my whatever, right? So, is it a conflict, or how do you get? And let's maybe start with insurance companies. We can venture a little bit broader. What's the sales pitch against some of these concerns? Because it always seems everyone feels like someone should do something. Mm. It's very rare that you then get to someone where there's an I. What can I do other than, I don't know, you know, maybe adjusting personal consumptions, but I as an organ of a larger organization. That would be very interesting.
Let me grab that. So on one hand, we don't have a sales pitch in as much as we are building these ourselves because we believe there is value in them, commercial value, significant commercial value. And we're building them A, because there's value, and B, because there's impact. So we are creating a business model that gives us the flexibility and the freedom to do that ourselves and with the team that we have built. But there is a sales pitch which is to partners, right? So we are inviting these organizations to journey with us because they have assets, they have attributes, they have drawing power, they have brands, distribution arrangements, etc., that are helpful to our ventures. And to them, the offer is come and be at the cutting edge of innovation. We are pushing into the enormous protection gaps that exist, and we are finding significant commercial opportunity. So if I tell you that a couple of the ventures that we have well underway now are opening up insurance markets that are worth about 20 billion in GWP each, neither of which has ever been opened before. These are whole new opportunity spaces, whole new markets that no insurer has built products for yet. And as we're going after these systemic risk spaces, we are finding huge need and huge commercial opportunity. And so the opportunity for the insurers that are working with us is to be part of capturing some of that opportunity. And then on the moral side, sure, part of serving that societal need. But we're looking at very large scale commercial opportunities. We're looking at very interesting combined ratios in the businesses that we're building. So we're building this primarily for commercial impact and outcomes, but we are tackling a set of problem spaces that are deeply societal. And so we love the combination of strong commercial and financial focus with powerful societal impact.
Can you give a very practical example of that?
Yeah, sure. So one of the ventures that we have, let me just pick, I'll pick a venture called Natura. Natura is a venture that we've incubated with SCOR, one of the big reinsurers. Mm-hmm. And we're just kicking off a partnership with the UN's Environment Program on this one. We're tackling the issue of biodiversity loss. And as we explore that space as a systemic risk, we find that one of the key barriers to protecting, conserving, restoring biodiversity is the disconnect between nature itself and private finance. As you think about, let's say, restoring or conserving 100,000 acres of mangrove swamp, at the moment that feels like a charitable initiative. And so philanthropy will invest, governments will invest, but private investors won't. And yet there's huge amounts of evidence and calculations pointing to the commercial value of the ecosystem services that these kind of nature-based assets deliver. We're trying to bridge the gap between the private investors who want to invest in ESG-related topics and the conservation community who desperately needs their cash. $8 trillion worth of cash is needed as investment into nature by 2050. It's a large amount, $8 trillion. The private investors at the moment, they look at their options. They can invest in, let's say, a dam construction project, right? A big infrastructure or railways, highways. They can put their $100 million into that, and they can buy a guarantee that de-risks that investment. That guarantee they will pay between 2 and 15% of their investment for. It's a large amount of money as a guarantee, as a premium in effect. That guarantee doesn't exist in nature-based investing, right? So Natura will be building that set of guarantees. We're working with the UN's World Conservation Monitoring group to connect the biodiversity science to the actuarial science, which gives us this bridge on which we can build a set of financial guarantees which de-risk the investors as they pour $8 trillion nature-based assets. And the market opportunity on that is simply enormous. So that's one example of a product of an enormous global problem space that is existential in nature, that there's huge amount of impetus behind, and yet there's a market failure, right? Big need, lack of supply. Typically that market failure is because of an uncertainty. In this case, the investor's uncertainty that they're going to get a return. Insurance is great at dealing with uncertainty, right? And so we're building the product that takes that uncertainty away, that unlocks the flow of cash by breaking the market failure. And we will capture a small percentage of that investment amount.
May I try to rephrase so I just kind of get it? So basically, we're saying, unfortunately, you know, unless a forest that is not converted into timber currently has no economic value. However, they provide essential services, even just from a pure economic health, now, what your tour is doing is, like concretely, is that saying you create a, I don't know, a register, a transfer product to, I don't know, or even buying these forests, capturing, are we talking a little bit like carbon offset? Is that the direction we're going? So someone procures a forest, make sure that it actually happens, that it's not double dipped, you know, all of these problems that I don't even know whether it was true, that Guardian recently, you know, there was a big splash about carbon offsets being BS, and then everyone, you know, I don't know whether that was actually the case, but there was a lot of uncertainty, so that you can then kind of go, are we talking about carbon offsets? It sounds a little bit like
carbon credits, biodiversity credits, nature-based tourism. These are all examples of ways in which nature is monetized.
Mm-hmm.
And yeah, so these will be some of the ways in which an investor looks to get financial return. The issue is that if the nature-based asset they're investing in, whether it's a mangrove swamp, a fishery, a forest, a temperate forest, if these things are damaged, if the ecosystem itself is harmed, so it could be floods, could be storms, could be wind, could be fire, could be pollution, could be the results of agriculture nearby. If those ecosystems are degraded, then they don't achieve the level of biodiversity and health of that ecosystem required to drive that financial outcome.
Mm-hmm.
We are calculating that risk and turning the biodiversity data and science and indices into a meta index that allows us to build parametric products on it, that allows us then to write the guarantees that say, right, if on the journey of restoration of your biodiversity as the index increases, if there is a dip caused by X events, we will pay for the accelerated restoration. Or if you are conserving and you're trying to maintain an index at a certain level because there's an economic value attached to that level of index, the biodiversity index, then we will again take the risk that some event causes a dip which affects your economic value from that ecosystem.
I find it very classical.
And I think it's just worth giving you that example because we've got a lot of work to do. The venture team are working hard with a phenomenal set of advisors and partners on this. But there's a lot of work to do to kind of turn that into reality now. So that venture is currently in pre-seed stage, probably looking to raise seed in the summer. Sorry, Tom, I interrupted you.
Yeah, I just find it a very classical way of let's say inventing new insurance propositions. I mean, if you just see the history of insurance, at a certain point somebody said, okay, I have an insurance against a fire or a flood or something else, and now you have different risks. It can be biodiversity or whatsoever. But you could also say, okay, if I have a house in the Netherlands, is there insurance which I can buy against the flood? Because the whole country will be flooded if you just take the climate risks on let's say longer time scale. So I always thought that would be my next question. Is there especially interest from the reinsurers? Because they will deal with all this, let's say, more systematic new risk, or is it more, let's say, the AXAs of this world?
It's both, but I mean, yeah. So right now, reinsurers like Swiss Re and SCOR are involved in what we're doing. I think we'll be welcoming Hannover Re into one of our ventures shortly. So yes, they're interested, but also the Generalis, the Zurichs, the Daiichis of this world are also involved in our ventures. I think one of the key differences, and then let me stop talking and make sure Simon can bring some wisdom to this. When we're dealing with systemic risk, we cannot do the classic thing and say, let's go insure the loss, because the loss is too big. It's catastrophic. It's enormous. It would wipe out the total balance sheet of the world's insurers, right? And do that every year. It is not possible to insure the loss associated with the systemic risk. What we're trying to do is use that apex industry concept to go upstream from the loss to find the causes, to look behind the causes to find what's triggering those, and to look behind those triggers to find out what uncertainties are getting in the way and compounding this complex system of causality that is ultimately leading to an enormous loss. Where we find that uncertainty, we can unlock that using actually a relatively simple Horizon 2 type insurance solution. So the guarantee I've described for Natura is not a complex, sophisticated innovation. It's actually a low risk innovation. We're just finding a radically different problem to solve. So that's part of the concept. Simon.
Yeah, I was going to give another example actually to bring it to life. So the MigraSure example. So one of the ventures is called MigraSure. It's for migrants and helping migrants, and it sort of exemplifies what Dan was just saying there. So the problem that it's addressing is that migrants, particularly in Europe, there are something like 80 million migrants in Europe at the moment, and at the moment there are, apart from the stresses on them as individuals, there's huge burden on the state to house them and look after those migrants until they get assimilated into society. And it's a bit like, it's a big systemic risk for society. Governments can't really afford to keep housing and looking after migrants. And how could insurance play a role in addressing this problem? So on the radio today in the UK where I live, one government minister said it's costing £6 million. That's about 6 million euros per day to house migrants in the UK, and the government foots the bill for that. And what we have spotted is that it's a problem of a classic problem that insurance has a role to play, because private landlords or even social housing landlords don't want to take on migrants because they're worried about them. They have all these biases and conceptions about what migrant renters will be like, and they don't want to take them on. They think they'll damage the house. They think they won't pay their rent, etc., etc. So MigraSure, which is being piloted in Germany at the moment, says, well, why don't we incentivize landlords, private landlords, to take migrants, and to do that, the local government, who are paying a vast fortune today, they'll pay the premium for the rental insurance. That premium is about 10% of what they're currently paying. So suddenly, then there's an incentive, or there's if you like, a relief to the landlords to take on migrant renters. It gives them peace of mind. They're more happy to take them on, and that relieves the burden on the state and provides a better environment for the migrants themselves. Sure. So it's a good example of, as Dan said, to look at the ultimate causes of a big systemic problem and try and release some aspect of that by using insurance mechanisms.
It's the same like export insurance or something like that.
It's using this aspect of insurance where insurance creates incentives and disincentives at societal level.
Yeah.
And if we design it well and we attack the right node in the system, then we can unlock some part of that systemic risk loss. So we're not going to solve biodiversity loss, right? But we might make a difference to it. Yeah.
Did you? Sorry,
Nick. I was just going to say, and as Dan mentioned earlier on, migrants in Europe are a market worth almost nothing to the insurance industry, but it's a large market. I think it's about, we sized it at about 15 billion, didn't we, Dan? I mean, that's a new market for the insurance industry that didn't exist unless someone comes along and unlocks it.
No target group.
And that's just for the landlord product, $15 billion of GWP that no one is building a product for right now, apart from migration.
Did you, because we've had it was a while ago, Tom and I had a discussion with someone from these apex in insurers, and her view about it was that on systemic risks, if you're really kind of coming to the floor, it needs to be public-private partnership. Or really, to me, it felt a little like passing the buck. It needs to be public, right? There's just privately, it's probably very unattractive for a private Dutch insurer to insure Holland when the dams are going to break. Might be for Swiss Re, I don't know. When you spread the risk of someone living on a mountain. But my getting at is it, and I think there are some risks that would do really well from a coming back to a social construct. Everyone has to put something into the pot because we believe as a society that's better. However, the administration of that could potentially be more efficient. Have you thought about kind of those things where it's ultimately a state insurance, an obligatory insurance, but the administration of such can be used, best practices from the private industry and potentially, entrepreneurial and technology as well. As we all know, those two are not yet fully disseminated in the incumbent insurance industry.
Yeah. So Nick, the role of public-private in this is it is one of the things we look for. So we're looking at food security this year, for example. And in food security, in any problem space we look for where is there enormous government spending. And in food security, is something like in Europe, there's something like 500 billion euros spent every year on farm subsidy. 500 billion euros a day, call it a billion euros a day. That's the kind of scale of problem that we think we can go after. So could we improve that? Could we improve the efficiency of that using the tools of the risk industry by 2%, by 5%? Right? Suddenly we've immediately got billion-dollar businesses off the back of that kind of problem space. So yes, public-private partnership is part of the answer here. And the MigraShore example that Simon explained, yes, we are in conversation looking at partnering with the municipalities in Munich and Berlin and talking to the local authorities and so on about how we partner with them. But several of our problem spaces don't require a public partnership. So these are all very commercial. It's just where public comes in is either they give us access to scale at national level or pan-national level, or because there's huge failure spend that we can optimize.
Yeah, but there's this kind of, let's say the strategy you have is a very commercial one, and in the end, all those companies are looking for commercial opportunities. They are not looking to save the world, because if they really would, they would be more active with divesting in fossil fuels and making, let's say, political statements about diminishing airports, etc., especially when the state is the owner, etc. But that still is fine, because I think because those companies, their main purpose is to earn money and to search for new commercial opportunities. It's a very economic and rational way of trying to solve those societal problems. But if you just see that, if you take all the companies you mentioned, how silent they are in a lot of those, let's say, climate discussions, I always have a little bit of mixed feelings, not with, let's say, your commercial strategy and approach, but more with this kind of double mouth they're speaking with. So on the one hand, they always say, no, we are so in fans of sustainability and we want to save the world, etc. And then I always think, okay, why are you a little bit more aggressive in taking, let's say, a stand to certain topics, especially if you take, for instance, climate risk? I don't know. What's your opinion?
I would. So yes, I share the kind of sentiment. But I want to, and you are right. There's a short-termism in terms of focus and shareholder return, and there's a actuary says no, we need 20 years worth of data on a particular problem before we'll even start to think about it. And then there's a 12-month minimum product approval process, and all these things get in the way of actually solving really urgent issues that no one's solved before. And that's why the ARK business model is creating a platform that gives us freedom to do this despite the industry. Okay. So we are raising a venture fund that will fund the ventures that we build. We are looking to create an underwriting vehicle, probably a captive reinsurer that allows us to write the risk that we are designing products for. And those things give us the free, and then the fact that we're building as a venture studio means we're building outside of the incumbents. So we're giving ourselves the flexibility to build despite those limitations. But I do want to give, kind of credit and honor to some of the organizations out there who are working with us on these problems. Some of the ones I've mentioned. We're also working with a lot of the big pharmaceutical industry giants like Pfizer, Roche, and Merck or MSD, where they see what we're doing and they believe that this is new, that it's credible, and that the approach we're taking, the theory of change we're applying, stands a better chance than perhaps most of finding solutions to what we're doing. And so I want to give them credit where credit's due for kind of believing and getting on board and putting money and assets into the things that we're working on.
I'm more skeptical on that, but I also can take, let's say, the state. So just take the Dutch state, and then you would tell all those citizens that they have to take new lamps, etc. But there are subsidies on fossil fuel for 20 billion a year. And they are the owner of the national airport, and you can still fly from Amsterdam to Brussels. So, and I think that's what you see a lot. That, let's say, if you do this on a long term, I even don't know if you just can't, let's say, focus and say, okay, we see commercial opportunities. They have a positive by effect because they solve problems in society. But I would be pretty skeptical about this whole purpose washing or greenwashing. So if, let's say, Unilever tells me that they want to save the world, and then I buy an ice cream for my child, and then they have invented a new one with a lot of plastic, and I say, okay, are you trying to solve the world, or you just made an ice cream with a lot of plastic which you can sell for €3 instead of €1? So
I think,
that's
Tom,
always why I'm a bit skeptical if those corporations tell that they want to save the world.
Yeah. Hey, listen, it's these problems. There's a huge mountain to climb. It's a massive mountain range to climb. These problems are all enormous, multi-trillion-dollar problems with a lot of vested interests sitting behind them. Plastic waste and plastic pollution is on our list for the next couple of years, and we recognize that. And I think as you know, we're a year old as an initiative. We've made some good progress, got some good traction, and we found some really interesting solutions that look like they're going to be viable. But we're very humble in the face of the mountain that we have to climb. And we know we're going to scratch the surface of it at best. But if we can make a difference, even in a relatively modest way, to these enormous problems, then that will have been lives well lived.
And Tom, I mean, I think there's this kind of fundamental, it really comes kind of down to this. Do do you feel there is do you feel there is a limited energy of change? And if you do, if you invest something in, let's say, superficial change and not fundamental change, you'll draw away from the kind of core topics. And I think, there can be an argument to be made there. From a kind of more personal level, I believe more on kind of how behavioral change, because organizations are also behaviors, and say every step matters. And as you start tackling the things that you can start to tackle, you build momentum, you build a flywheel, and you can kind of get towards you build motivation. Because at the end of the day, I think, it's everything and everywhere and now, and you just kind of have to start where you see, which is not. And what does that mean? Just because Unilever in some parts of the business is still rent seeking and is still exploiting, inadequately priced resource consumption, doesn't mean that one cannot partner with them on a different angle if it drives positive change. I think you just gotta I think there is a role to play for pragmatic, entrepreneurial, and making sure that you generate your own oxygen to reinvest rather than getting a handout, which I think is a problem of many NGOs, to kind of create a perpetual motion. And you just got to be pragmatic about it, I think.
The only thing I want to say is that, to me, it's totally fine to see there are commercial opportunities, and the effect is that you may be solving a societal problem like housing for immigrants. But if the starting point is of those corporations, and that's something which is also a real topic in public opinion, which you see in all those different countries, if you just see the voting examples, etc., that people feel that it's not really, let's say, true, which is still fine, because you can have the position of saying, okay, I wanna solve something, but the first step is that I just have to deliver my figures every quarter because I have external shareholders. Just take the example of Danone or all those other. Unilever is also a good example. So, and I think in this kind of communication, I think you have to be very careful that if the starting point is purpose for those big stock listed companies who are so quarterly focused on their quarterly results, I don't know if you even need this. I would say if the starting point is you have a commercial opportunity which has a positive side effect, it would be still fine, because people just wouldn't buy that those big corporations are going to save the world or want to save the world. If they really would believe in doing this, they would act in a different way. That's what the citizens or the consumers think. That's why people are so skeptical about this.
Yeah, I mean, let's take a good example. I mean, I guess the pharmaceutical companies, you could say, did save the world with their COVID vaccines. You could say that, and the government picked up the bill, and then most countries are now in huge debt as a result of that. But it was the inventiveness of those pharmaceutical companies to very rapidly create solutions that helped us. Now, one of the ventures we've got going is in Africa, which is about providing healthcare access to people who just don't have it at all. And so what's happening there is that the pharmaceutical companies have got solutions to help, for example, women manage cancer over their lives. And that's a big killer for many people in parts of Africa, because the state can't provide any services and most people can't afford private healthcare there. Now, there you've got a very interesting example of what you've just described there, Tom, because pharmaceutical companies they can do screening, they've got vaccines against, they've got other types of treatments, they've got education.
Oh, I think we've just lost Simon.
Oh, dear.
I could probably pick up the flow, but yeah, in that venture, we're building a set of approaches that provide access to the kind of wonder drugs and the vaccines and so on. But maybe the key thought, Tom, is that we are not starting with the corporates. We are initiating these things. If the corporates can bring some asset or some value to it, brilliant. But we are building these businesses because there's an opportunity to use insurance to solve a problem. So maybe that helps you get over that hesitation there.
So maybe segueing into that. So how can someone get involved, right? And let's go through the kind of I am an insurance executive. I'm listening to this, and I think it's a great idea. Maybe I have some on it. How do I get involved? What are you looking for? And then we can kind of go through the various stakeholders just out of interest.
You want to take that, Simon? Your internet broke a second ago, but
yes, yeah, exactly. Yeah, there's different ways that different people can get involved. So as Dan said, we've created a venture studio. It's creating ventures. We invite people to invest in the ventures. We invite them to contribute their assets and resources. And we are looking to create a fund so that we can be masters of our own destiny in terms of kicking these ventures off, finding other funders later on. However, what we recognize is that we need to, if we really want to make a difference, create 50 ventures over 10 years that can have an impact. We want to make sure that the success rate is as high as possible. So we've created an industrial process at the front end to identify opportunity spaces, we call them. And we run a series of think tanks throughout the year looking at specific topics, subsets of those big categories we talked about before. And there we invite experts from around the world, different parties and stakeholders who could be interested to participate in those think tanks to help us identify a prioritized set of opportunity spaces, which we believe have significant commercial opportunity, but also very, very significant social impact aligned to the UN's SDGs. And so the way of getting involved, if you, whoever's listening to our podcast today, if you are an expert on a topic related to climate change, poverty traps, healthcare access, or digital dystopia, we would love to speak to you about maybe either getting the benefit of your insights, participating in the think tanks, etc., etc. If you are an entrepreneur who believes in our mission, wants to give something back, and has that dynamism and experience, we want to speak to you absolutely to help run these ventures when they come out of the other end, once we've defined the focus of them. And then if you are an insurer or a financial institution that wants to participate with us to think about how to apply insurance and financial services in a new way, again, we'd like you to participate in our thinking. And some companies also may wish to invest in the fund when that is set up. It's not set up yet. And then if you are an NGO, or if you're part of a major NGO trying to tackle these problems, again, we want to collaborate with you on trying to achieve the mission. So I think those are and again, as we talked about, if you're a part of a large corporate, a pharmaceutical company, or a medical company, or a tech company of some sort, if you've got assets and capabilities that would help on our mission, that would be great. So lots of different ways of getting involved, very, very active, a bit more passive. And we'd love to hear from as many people as possible. Ultimately, we're trying to create a big community, and we believe in the wisdom of crowds and the passion of people who share the mission, and we want to try and harness that and direct it towards these noble aims.
Is there, when you've said kind of the industrial process, there must be a lot of ideation going on, is there a way to kind of contribute but also learn from all of these ideas and the validation? Because I believe there's probably lots and lots of design thinking where everyone just kind of starts from scratch and does not have the pattern recognition, the process that the the two of you bring to the table of having done something. I would imagine, you know, over the last 10 years, you learned a trick or two, you know, and in the next 10 years, there might be, you know, even more tricks that you'll learn as you'll kind of become experts on this specific impact-driven venture studio building. But is there a way to access these things for corporate so they don't have to reinvent the wheel just on the ideation part, for example?
Oh, absolutely. Yeah. I mean, absolutely. So we've created a membership actually, because we wanted real commitment. So we want people to help fund the ideations, what you would call the ideation stage, because that's a big, as I said, creating an industrial process for that takes a lot of resources. And that process defines the opportunity spaces that then go to the venture studio to develop into business opportunities. So we created a membership structure where large corporates, whether they're insurers or non-insurance organizations, can become a member, helps fund our industrial process, and then they get access to these insights that are, you know, that they don't have today and would cost them a lot of money if they did it individually. So that's how we've sort of tried to fund and support that the front end of our process. Absolutely.
What are the learning of this? Because let's say if you see those impact in initiatives, etc. To my point of view, there are always two learnings. On the one hand, if it's a new opportunity and it's not an existing product, or it's not competing with an existing interest, you have a big chance. So this example of immigrants is a very good example. Or if it's cross-border. But let's say, and that's why I also made this remark about, let's say, purpose washing. Just take a very classical example. We are trying to establish a CO2 neutral mortgage. Everybody says, great idea, because it should be integrated and the houses generate 25% of all the emissions. Everybody says, from a rational point of view, you're totally developing the right stuff. But in the market itself, the big corporates don't want to join this initiative because they say, okay, you will disrupt our business. So what I think is very interesting of this venture studio is new products which don't exist. So you don't have this conflict of interest in those corporates, and cross-border, because you see all this disruption of these models. Also, let's say mortgage, these lenders are always external funders, not from the country itself. So if you want to disrupt in England, for instance, the mortgage business, you're funded by Nomura or State Street, etc., not by an English bank. And then if you have disrupted the first phase, then also Barclays joins you. But in the beginning, they hope you will not make it. Exactly. So I really think that if you do this on a more international scale, and you can do this kind of cross-border initiatives, you have a much bigger chance than an entrepreneur in the country itself, which is a really hard, difficult thing to do.
You're right, Tom. So each of the systemic risks we're working on is global, and each of the ventures we are building has a global ambition, and we're looking at solving the problem at global scale. To take Natura, right? We're looking at conservation pilot opportunities in Canada, in Brazil, in Nigeria, in Sri Lanka. Take Migrashore, we are starting in Germany, but the opportunity is across Europe, into the States, Southeast Asia. We're working also at the moment on disinformation risk in collaboration with Daiichi over in Tokyo. And that's a fascinating problem that doesn't even exist at a physical state level, that exists on the internet, right? And so disinformation as a risk category is a fascinating topic to be working on. So yeah, the ambition behind each of these is big. Just to give you a sense of the areas we're working on, that we're starting work on new over the next 12 months. We have aging populations with retirement and social care around elderly populations. We're just starting on that, I think, in a few weeks' time. We'll then be working on food security as a problem space, hopefully getting the World Food Programme on board, possibly the UNDP and the Gates Foundation, looking for partners to work with us on the problems around food production, distribution, and so on. Third, we're going to be working on green energy transition and the issues that are stopping people from from moving into the uncertainties, the risks, the concerns. And then later on in the year, working on critical IT infrastructure failure, which has connotations of cyber, but we're looking far beyond cyber risk in that space. We're looking at the risks to society when critical IT infrastructure fails. So those are some of the ones that are on the list at the moment. We're also just spinning up a new venture. This week, we started work on mental health amongst caregivers. So 400 million caregivers worldwide. Over 40% of them have significant mental health struggles. That's a huge population, a huge problem, and it's completely overlooked and unseen. It's not a group that the insurance sector has gone after. It's not a problem or a risk or a health concern that the health insurance sector has gone after. So we're going after that now to look at whether we could find ways to make a difference in that space and build valuable, viable businesses out of it.
No, it's a clear concept. I understand what you're doing.
Awesome. Gentlemen, is there anything? I think that's a good wrap, but if there's anything else you'd like to add, any shout out on top of what you've already said, I think now would be a great time, but otherwise I'd say it's a wrap.
Great. I think Nick, if you let people know our URL, there's many ways people can get involved, and if you're happy to share that with people,
of course,
and connect with us, that would be wonderful. But thank you for having us on today. It's been good fun.
We can also talk, because this whole topic of let's say the mortgage industry is the biggest industry, 1,000 billion in Europe every year. From a scientific point of view, it's very simple, but it's systemic. It's from a systemic point of view with these players and existing interest and conflict of interest. It's a difficult topic, but let's say from a scientific point of view, it's a very simple problem and easy to solve.
Great. So, guys,
thank you for having us.
Thank you very much. Have a lovely day and speak soon.
Thank you.